Welcome to the Matt Waller Podcast, where we look at success at the intersection of technology, logistics, supply chain, retail, and CPG, also known as the retail value chain. I want to clarify that this podcast is distinct from my responsibilities as a professor in the Sam M. Walton College of Business. Nonetheless, it aligns with my aspiration to provide practical insights to professionals and business by showcasing companies and people that can enhance your ability to manage, lead, and strategize and market effectively in the retail value chain. Before we dive into today's exciting episode, I'd like to thank our sponsor, New Road Capital Partners. New Road invests in proven technologies, services, and products that serve unmet needs in the marketplace. They look for companies in supply chain and logistics, as well as consumer-oriented companies. For more information, go to newroadcp.com. I would also like to disclose that I am a strategic advisor to New Road. I'd also like to recognize podcastvideos.com for the services they provide for these podcasts. I'm very pleased with their services. And now, without further ado, let's get into the exciting episode. Today, I'm interviewing two people from Progress Ventures. I think you're going to find this really interesting. Sam Thompson is the founding partner of Progress Ventures, and Adriaan Muhlen is the managing partner of Progress Ventures. And it is so interesting. We're going to be talking about innovation in this sector. We're going to be talking about all kinds of new things that are sprouting up, including things like retail media networks, trends and technologies that are occurring. They also provide advice to early stage founders and entrepreneurs about what they're looking for in innovations and new technology coming up. And they talk about the difference between just coming up with a technology solution versus a platform. And they're really looking for platforms. But they have tremendous experience. Sam Thompson, his insights and experience have been sought after by the Science Project, where he served as an advisor, the Ad Club, where he was a board member, and he continues to offer his skills and insights in his current role as member of the Board of Trustees and Treasurer of the Conversation U.S. He's also a senior director at Progress Partners. He's adept at incorporating an entrepreneurial mindset into the corporate development, venture financing, and merger and acquisition strategies. This innovative approach was particularly evident in 2020 when Sam played a crucial role in leading 11 acquisition deals on behalf of Outside Interactive. His talent for identifying fresh business synergies and alignment opportunities is enhanced by his broad network of contacts. Utilizing these skills and resources, Sam was able to help Outside Interactive scale its business by an impressive tenfold. And you're going to hear other examples as well in this. Adriaan provides an insightful perspective on the dynamics of innovation in the business world. He notes that established companies often concentrate on sustaining innovation, that is, enhancing their products or services to attract a clientele willing to pay a premium price. On the other hand, disruptive innovators constantly strive to refine their offerings to cater to a diverse range of audiences. At Progress Ventures, Adriaan's primary role involves identifying these disruptive players, and you'll hear a little bit about how he does that. These are innovators who facilitate a seamless transition towards a digitization of the future and corporate landscapes. He also holds an MBA from Harvard and a BS in economics from Miami University. I think you're going to learn a lot from this, so enjoy. Sam and Adriaan, thank you so much for joining me today. I really appreciate it.
Good to be here. Thanks for having us.
And I know that New Road and your firm have worked together in the past on some investments. We might get into that. But I'd like to start by really just What sets Progress Ventures apart from other venture capital firms?
Progress is a specialty VC firm. We are very narrowly focused on the advertising, marketing, and media space. We don't do content and we don't do anything consumer. It's really the technologies sitting behind the modern day, marketing and media organizations. It is a, area we have been focused on for the past 20 years. We all come from industry, and so we have seen kind of the digitization of these verticals over the last couple decades, and we have kind of evolved with it as those technologies have evolved. So that's one part, and the second part is we are a boutique firm that is part investment bank, part investment firm. And so kind of the grown-up companies are clients of our banking side. And traditionally the earlier ones are companies that couldn't afford banking services that we invested in. And just to be very clear, we don't invest in our banking clients and we don't bank our portfolio companies to keep complex with bank. But we do use the resources of this broader organization across both sides of the business. We have a lot of executives that are part of our platform, and so we are completely focused on helping accelerate our companies. And we often get brought into companies because they want access to our network and our resources. And so we're a specialist. This very, very focused on value added. And we'll get into that later, but lots of things we can do for these companies, but we're here to accelerate their revenue growth.
So I know that you've mentioned that big players focus on sustaining innovation, while disruptive innovators cater to a diverse range of audiences. Can you delve a little bit deeper into this dynamic and perhaps provide some examples?
Sure. I guess in the world of media or advertising, marketing, media technology, it's been a constant evolution of the cutting edge, right? And what was first ad tech was really very little technology, but over the years, past 15 years, a lot more technology has come into play and automated a lot of what was quite honestly manual processes aided by technology. And so as you get to some of the earlier large players, call it 20 years ago, 15 years ago, they were trying to remain or sustaining their innovation and becoming, keeping their position at the front of the market, while at the same time, there were a lot of earlier stage companies, call it in 2006, 2007, 2008, even into 2010, that were really disrupting the larger players in the market. And, what was, Microsoft or Yahoo or even in a lot of ways, Google back then was, challenged by some of the younger technologies that we were investing in when we first started back in 2008. And I'd say that's continued where you're oftentimes seeing the next wave of innovation taking place. In our first investment, it was MediaMath. And what they were doing to drive forward. And they ultimately got replaced or, if you will, beaten by the likes of the Trade Desk, which we did not invest in. But I think that's the story of this market. If you're not familiar with the technologies that are here and who's really pushing the innovation, then you ultimately risk making the wrong bet or placing the wrong investment. So, other areas where we've seen a great deal of disruption and innovation. One of our investments, a company called Simplify, and we can certainly get into more about that later. But getting after the local market with the way that Simplify did and its ability to automate and manage thousands of campaigns across many different local markets across the U.S. really put them on the map and has kept them, in the lead. And was one of our successful investments. Integral Ad Science, I'd say, is the same thing, really innovating in how once you got programmatic advertising working, That's great, but then are you sure you know where that advertising is going? Did it even show up, right? So brand safety and ad verification became a must-have for a lot of the advertisers. And so no longer were some of the original programmatic advertising platforms enough. You needed that extra piece.
We might want to get into this later, but when you look at retail media networks and how that's making everything so complicated, I know some research we did showed that there were about 600 retail media networks that CPG companies were having to consider. And, it's so complicated. But before we get into that, I'm curious, how do you identify potential disruptors in the market? And what characteristics or indicators do you look for?
Yep. Let me take that. We because we are narrowly focused, right? And because we have a pretty good network, we are constantly discussing what is going on. And it's funny you bring up retail media because that's one of the key things we are spending a lot of time talking about as an organization. And so for each of our funds, and we're currently investing out of our fourth fund, we have a set of themes that we think are relevant right now or that we're spending a lot of time talking about. And retail media is one of those themes. AI is one of them, data, privacy, automation. And so as the decades have progressed, our funds have evolved. And, as we raise a new fund, we set out kind of what are those key themes for that fund. And we are very proactive about communicating that to our organization. We're very proactive about mapping it out. And we are just constantly hunting for those companies that fit in those themes. And we'd like to say we see everything, and I'm sure we don't. But we typically, we will at least have had a conversation with all the kind of the relevant companies that emerge in those themes. Not all of them are investable, but that's how we go about it. And then it's usually in, kind of a mutual, people in our network will say you should meet this company or that company. And we said, yeah, we have been looking for that one. And so that's how it kind of comes together. There's very little kind of random opportunities that are coming into our email box or website and saying, hey, I'd like to meet. It's almost everything is via our network and focused within those areas that we're looking at. So it's very efficient in terms of focusing it on those, kind of on the winners. That's kind of how we.
I'll dovetail that a little bit, and just to say, to Adrian's point around themes, we when we raised fund, those themes were in our deck. We had spent enough time around the market. This is where we felt the market was going. Even looking back, 3-4 years ago, the concept of the deprecation of cookies in the advertising world was being discussed, being played with, but really, just now we're starting to see that actually take place. Cover story in the Wall Street Journal today, talking about Google's initiating the process of deprecation. But there are a lot of companies in our current fund even that we've invested in that are very focused as one of our themes when it comes to data and identity on what an advertiser needs to be able to get the same reach, to be able to get the same access, to target the right audiences when you don't have those cookies anymore. Now, it's been several years in the making, but you've got to place those bets early, get in on those companies with the assumption, effectively, right, or our thesis that these will become very important as this process hits, and we're just starting to see that now.
That's really interesting. So would you share some success stories or notable investments from Progress Ventures that really exemplify your approach to identifying disruptive innovators?
Yeah. This goes back to the couple of companies I referenced a little bit earlier, but take a Simplify as an example. So Dallas Fort Worth based company. We were the first outside investors to come in, and the chairman of the board of the very small business that existed, really the seed investor behind it, came to us knowing about our reach in the market, our understanding of the advertising landscape, and brought Simplify to us. We launched with that initial outside round, and a key part of the success that Simplify had was in part their technology and what they were doing, right? Rather than doing several, call it 4,000 campaigns that are worth 50, 60, 70, $100,000 each. They were doing 100,000 campaigns worth $4,000 each. They were able to take the advertising dollar and make it effective at a very small level because they were hyper targeted to the local markets that needed that advertising, right? So the key partners in their growth story were a lot of the broadcasters that are out in the market, a lot of the newspaper companies, all the businesses that already have sales on the ground in those local markets that are helping those local businesses, the regionally focused advertisers getting onto the web. And Simplify became the platform, the tool, the technology that empowered these local media businesses to bring in advertising dollars in a digital way. Because to that date, really, digital advertising had been a national medium. It had only been used by the largest advertisers advertising in the largest media businesses. And Simplify turned that around and brought it down to that local level. And they've continued to innovate and drive technology. So they were no longer just display ads. They were also video advertising, and they were doing now CTV. And so they've been able to continue to push the envelope in what they're doing. We ended up exiting that business several years ago now, and was a great return for our investors, great return for the fund. As some of the larger players in the market, GTCR in particular, the large private equity investor, bought them out and brought them on their way to their next.
What a great story. Now, beyond providing capital, how does Progress Ventures support your portfolio companies?
Yeah. So we are very specific in that sense, and we're very hands-on. We are very different than most early stage VCs in that we run a very concentrated portfolio. We have 14 companies in our current fund, and we'll probably go to 15. But it's basically a deal a quarter. And the idea there is that we are high conviction investors, but really hands-on. And so we've learned we can't do much pre-revenue, so we won't invest there. But once companies, and we call it $1 million revenue visibility, have kind of the initial commercial traction, we typically know their initial customers because they're in our verticals. And so if they get traction with one of those customers, we can then go to all the other people we know that are in the same space and say, hey, you should really speak to these guys. And so we really help accelerate them on the revenue side. Now, kind of our internal thing is we want to be the party that helps them get from 1 million to 10 million in revenue as quickly as possible. Secondly, we have a lot of people in our network. And so as companies grow and add roles or upgrade roles, we get very involved in a kind of, hey, here are some people you should meet, because we know who's in the market, we know who've done certain things, and or is looking for other opportunities. So we're a big matchmaker there. And then I guess finally, and then we do a lot of operational help because we've seen a lot of these companies grow. But finally is on the capital market side, because we are both an investor and a banking firm, we are constantly speaking to everybody who is active in our verticals, whether early stage venture funds or big buyout firms. And so we talk to all of them on a regular basis across our firm, and we make them very aware of our portfolio, and they actually like seeing what we have, because we know they know we're investing on these themes, and these are typically themes that are of high focus in the broader area. And so we make connections, even very early connections to kind of late stage buyout funds for early stage companies, because they want to know what's going on technology wise, and ultimately they may buy our companies. But that's kind of the key areas where we help, and we do it very intensively. We sit on the board, but we speak to all of our companies on a weekly basis, and we have a working session to focus on the issues that they need resolved this week. And that's how we get most of our influence.
Wow, that's great. As a firm, you all are you're seeing a lot of innovations out there. But in the world of digital innovations, what trends are you seeing, And how do you think they're going to shape the future?
Yeah, it's a great question. This ties back a little bit to your point earlier on the retail media landscape, and that's just one, right, that is completely changing how, and I think driven initially by Amazon, but as that's completely taken over the attention of CPG and other major marketers down to the smallest sellers. Now, I think grocery is positioned to take advantage of that and move beyond the sharper marketing that we've known for the last 50 years and put it into a very different position in a way that the online presence in one form or another of the retailers are becoming the publishers that we've seen for the last 50 years, right? There's an element of content that large retailers are investing into, but just the dollars that are moving through, as demonstrated by Amazon, that you can get that much closer to the purchase with the ad. You're going to see a lot more of that happening. Walmart's already doing that, and they're in a very strong position, I think, because of their retail presence that Amazon doesn't have. But I'd say that whole landscape is completely transforming how brands connect to consumers. So that's one big theme I would definitely say that we're very focused on and very interested in.
Well,
I think the other one, go ahead.
Just quickly, I mean, to that point, I find it amazing, this retail media network phenomena, how it's changing so quickly. With Walmart, for example, if you want to engage with their retail media network, they have something called Walmart Connect, and you can either use their team, or you can do it yourself, or you can use a third party. But and I think their research I read shows that those who use the third parties tend to actually perform the best. But something that was really interesting to me is, right, with Walmart, you can use their retail media network to advertise on their digital real estate, like their app or Walmart.com. But you can also use it to advertise, say, like on the self-check stand. They have that monitor there, and you can do it there. You can do audio in the store, other video in the store. Even within Walmart.com or the app, there's a lot of different. You can be a sponsored advertiser. You can have a brand page. There's all these options. But you mentioned earlier Trade Desk, I think you said at the very beginning, something about Trade Desk.
Just as one of the leading platforms in the market. Like I said, we didn't invest, but yeah, I mean, they've been I think a leader in the market.
Yeah, and I think Walmart, I read somewhere that Walmart collaborated with them to create a platform to allow suppliers to advertise on their advertising space on, say, Facebook, Instagram, those kinds of social media.
What's considered off-site advertising? Yes.
Yeah, offset advertising. I have to admit this is new to me, so but I find it interesting. Sorry to interrupt there, but so go on to your your next.
Well,
one.
no, I'll just to stick on Walmart for a second longer. You mentioned it. The Walmart Connect, one of our investments in the current fund as well, a company called Takeometrics, has been a very close partner to Walmart and is doing, just as you said, a lot to help the sellers on the Walmart marketplace advertise onto Walmart through and optimize their presence using the Takeometrics technology. So they are a third party that is closely partnered with Walmart to enable and to help these sellers, be it larger brands or smaller independents.
I mean, that's a huge opportunity for these marketplace sellers to gain competitive advantage, because I think,
absolutely,
most of them aren't really aware of it. I'm surprised, actually. And again, I'm a neophyte. This is not my area of expertise, but I'm surprised how many people still don't even know about these retail media networks that are working for major, CPG companies, not to mention the marketplace sellers.
Well, I mean, speaking to opportunity, right? That's where I think you put a number out there of some, over 100 different retail media networks that are out in the market and available. It's a little bit of a mess, right? There's high fragmentation, and whether you're a large agency or you're an independent brand marketer, It's not an easy landscape to navigate. That's one of the areas that we're looking at, is how do you consolidate? How do you try and pull together the broad landscape of retail networks so that it's as simple as a single buy that goes out to a lot of publishers, or if you will, the retailers or those retail networks. It doesn't exist yet. And there's no less than, at least a dozen different conversations that I've had with various stakeholders within that ecosystem who are all looking for this, trying to figure out how do we aggregate demand and how do we aggregate supply.
Sam, I think that's a huge opportunity because, again, I speak to lots of CPG companies and their leadership, and I know this is there's a lack of education and there's a lack of technology, but also there's a lack of ability to even calculate the ROI of different opportunities in these ways.
Yeah. No, to your question about how did we find themes, for our next fund, we want this company that makes sense of all those retail media networks that is not Walmart, that the ones that are in number 10, number 20, and makes sense of that and creates that common platform. That's what we're looking for, and we haven't found it. But I know it's going to be the big winner in our next fund once we do find it, because that's the next big missing link. Just one other thing to your question of the key themes. The other key thing right now, which ties closely to it, is data, identity, and this ability to target. Everybody's talking about it as data, but in reality, it's still a very primitive ecosystem, where there's a lot of manual processes, a lot of work being done in Excel, where very expensive people are not being fully utilized. And so we are continuing to invest a lot behind that, to enable that, to take those inefficiencies out. And again, the ultimate example of that is retail media, where actually you are able to do a lot of stuff, in a very efficient way. It's good for CPG, it's good for the retailers. But that's where the world is going, and there's still a lot of catching up to do, and a lot of innovation left. And that's been a core theme of our current fund.
Well, tell me if this is right or not, but I can't remember the source, but I remember reading that the amount of spend through retail media networks currently is at about $40 billion, but within 2 years it's going to be at like 160 or 180 billion. Does that sound right?
That sounds pretty good. Yeah.
The shocking thing on that 40 billion is, if you go back 3 years ago, it was minuscule, right? This is one of the fastest growing, fastest shifting of advertising dollars we've ever seen. And I think people don't fully appreciate the massive shift that has happened and will continue to happen. And a lot of people are playing catch up, both retailers and CPG. Because in the end, why it's happening is just because it's super effective, right? You're spending dollars and you're seeing instant results. And if and then you're able to you have the tools to do the you see the attribution, you can measure it, and if your spending is working, and that is just not possible anywhere else in that efficient of a way. And even search I think is challenged by this, right? So it's a massive shift. And it will continue for the years to come.
Very exciting space.
Yeah, and what's interesting is it's putting people who were traditionally not in the media advertising publishing space, the retailers, in a whole new ecosystem that they need to go understand and need to get efficient at. It's a new capability, and that they have to get good at, because that's where their margin is going forward.
Fascinating. Well, it's exciting that you all are big players in this space from a investment perspective. It creates a lot of opportunity for you. So given what you just shared, I think it's a good place to ask, what advice do you give to startups or entrepreneurs who aim to be the disruptive innovators? And this is one space where you're looking for some solutions that you can't find yet. So what advice do you have for them?
So this goes a little bit into some of how we look at companies as well. And in some ways, I don't want to discourage an entrepreneur from going after an idea, going after an opportunity just because it won't be the right fit for us. But I'll say in how we look at things, there are some cases, especially in the world where we invest as specialists, where there are some things that are inevitably just a product or a feature, right, versus a platform. And so I think to be truly disruptive, you need to be a platform. Now, you could do a product or a feature that's a very well-built product that is a perfect add-on to a larger platform. And within a short period of time, you could be acquired. It won't necessarily be a huge exit, but it'll be a good exit. It's just not what we look for when we're looking for our venture returns. We need to invest in platforms. What are the technologies that become a standard for a certain part of the market or for a certain market? And if it's just a product or a feature, and we give this feedback all the time to a lot of companies that come in and pitch, really impressive technology, great team, but there are many factors that we need to consider, and one key one is this ability to truly scale to venture returns, and that's where you have to delineate between that product or platform.
So how does Progress Ventures manage to raise capital, the capital required to launch a significant number of leading digital businesses across the United States?
Yep. Well,
yeah. Go ahead, Adriaan.
So we are a traditional VC fund, set up as a traditional fund, and we have traditional financial investors who may have a link to our industry, but they're investing us purely from a financial return perspective, and they're looking for industry specific, for an industry specific fund with expertise. I believe in that model. That is kind of half our fund or source of capital. The other half is we have a number of strategic investors in our fund, large corporations who, they're LPs in our fund, but they use us as a source of information and intelligence in the areas that are important to them. Many of them have invested directly in startups in the past and discovered that they're not really set up for that. And so they've come to see a fund like ourselves where they can invest in our fund and get exposure, quite frankly, to things that are probably broader than what they are concerned about or looking at. So it stretches their horizon a little bit, but in a very efficient way. And then when there are companies that are highly relevant to them, they may co-invest with us in later rounds. And ultimately, they may end up buying some of those companies that they have been able to track through us for a number of years. Now, we don't give anybody any kind of special deals, but it's a very collaborative relationship that works really well for both sides because we have access to the highest levels at these corporations. And so we can very efficiently introduce our companies to the people, to the key decision makers, and vice versa. They tell us, issues they're trying to solve, and we can connect them with a lot of insight and perspective to companies that we think have promising solutions to solve those problems. So that's the other half of our LP base, and together it works really nicely. But that's where we're very different from a traditional VC. That is more purely financial.
Impressive. So what specific deep capabilities has Progress Ventures developed in the media, marketing, and technology sectors? And how have these been instrumental to your success?
Yeah, I mean, I go back to sort of where we came from and what got us started in the first place, and really starting as M&A advisors, investment bankers in this market with my partner, Nick, 15, 16 years ago. And really all the way along being very minded about where the market is trading and, who's buying what. Not to say that other venture funds aren't as focused on it, but we have that intelligence right here at hand, and see it daily. And having a mindset toward the ultimate outcomes of each of these businesses, I think, is a step ahead of most other venture funds out there. They can certainly make a phone call and connect to a banker and get a number of different perspectives, but that's what we bring to the table. And I think as investors, there's two sides of it. I think it takes an incredible discipline to be a really strong investment manager. But I think the second half of that is really in an important piece, and that is how are you transacting and trading up, on that portfolio and getting the right exits for each of these companies. So not only being specialists and very focused and sector focused in our fund, that's helped us with our themes. I think it's also really understanding how the market is changing and where the interest is lying on the tail end of that investment.
Do you have any adjacent sectors that you've delved into at Progress Ventures?
So we've been talking about retail media, something that we've been focused on over the past 6 or so years. And at the same time, we've been spending a lot of time around just commerce in general. And as you get the sort of collision between retail and marketing or advertising, I think a lot of the retail technologies, a lot of the e-commerce technologies, everything that's supporting the retail world, I think are in some ways very parallel to what we've been doing in the advertising, marketing, and media space, but certainly adjacent and I think a valuable add-on, which is something that we're focused on for Fund 5.
Yeah.
How do you?
We want to stay.
Oh, go ahead.
We want to stay very focused. And if anything, the business models we are investing in have been evolving. If you look at our first fund, they were mostly kind of media revenue business models. Today, we're mostly investing in software and services businesses. And so that has evolved, and I think that's where we will stay. So it's a pretty contained box, and we're not going to overextend ourselves yet in the sense that we don't know or can't add the kind of value that we add in this area.
That sounds strategically smart. So, but how do you? There's so much going on. How do you stay ahead of the curve and anticipate, the next wave of innovation?
So, again, we have a large group of executives and residents, and every fund says they have that. We have this group. We have a manager of that group. We do a weekly call where we talk about specific topics. And so it's very much an inside baseball type, kind of organization and then network where people will tell us this is what they're focused on, and that's what they need, and this is what they're seeing. So that's how we stay ahead of it in a way, on a weekly basis. We spend a lot of time at conferences. We're very present at these conferences. We do a lot of dinners on specific topics. And so we bring people together. At conferences, we have hundreds of meetings. We bring big teams, and that's, where we, collect information, share information, make connections for people. And out of that fall kind of the current, you can look at our meetings and say, okay, this is the area where people are innovating right now, because we're getting a lot of meetings in these areas, and so that's kind of how we do it.
Yeah, Matt, I'd say we stick to our lanes. I think that it's, as a generalist investor, chasing after whatever the latest and greatest entrepreneur or trend is, can be risky or riskier, right? Where I think we stay ahead of the curve is just staying to our lanes, really focusing on the markets that we know well, where we have a strong network, because then a lot of the emerging tech, a lot of the trends come to us. People know that we're here to invest into the next wave, and they want to come to show it to us. because they know that we can help them in their go-to-market. Going back to one of your earlier questions, but if you asked any of our CEOs, about us and explain who we were or how we've been helpful to them, they would say that we're the hardest working equity position on their cap table, well beyond whatever position we have on that cap table. We are very focused. Most people that invest in us think of us as strategic investors, even though we're a VC. We're not an operating company. We're not a retailer. We're not a big media company, but they think of Progress Ventures as a strategic fund. And I think that goes to the point that we're so narrowly focused and stick to those lanes.
In light of your extensive experience with mergers and acquisitions, could you share some challenges you've faced in the process and really how you've overcome them?
Yeah, another good question. I mean, it's always a dance. Companies that are in venture funds, the venture fund themselves would much rather have their companies bought than sold, right?
Yeah.
And so we've always said to any of our clients or potential clients on the banking side, and we definitely say this to all of our portfolio companies, is that companies buy companies they know. And so, the idea is that you want to solve for that challenge well before you get there. Meaning, who are the key partners as a young company in the market that you're working with? Are you working with Walmart? Are you supporting Walmart Connect? What other retailers can you work with? Target? Can you work with eBay? So we want to help our companies, just like we did with Say Simplify, getting into Tegna and Gannett and Gray, and think about all the different newspaper and broadcasters around the country, all those holding companies, getting those relationships built up, help to ultimately land what becomes your ultimate acquirer. And so the key piece is thinking about that from day one, maybe not acting on everything immediately, but let's map this out. Where do you logically fit with the industry, and making sure that those acquirers know exactly who you are.
Are there any specific M&A transactions that really stand out in your memory that you could share, including any key learnings from them?
Yeah, we've seen a lot of good exits. We've seen a couple of great exits. It's definitely been a broad range, and I would say from an investor's perspective, where you can have a great buyer, but the dynamics of that transaction may not be always the best, right? After we invested, we got crammed down from later investors. And so our position on the cap table was such that, our return at ultimate exit was relatively de minimis. That was early on in our fund. That's when we had a very small amount of money that we were investing at the time. And since then, we've grown significantly. And I think we've learned where we've had successes, it could have been a lot more successful if we had more money to invest. And so, I think the key thing is when it comes going back to how do you set up for the best outcomes, oftentimes it's making sure that you're managing and investing the right amounts at the right time and having the money to do it when you need to. Mm-hmm. There are any number of different dynamics that take place across the life of a fund, where you might have a syndicate or a cap table, a board who decides to do a pay to play to get to the next phase of that business. And if you don't have money to pay into that round, you're out, or you're crammed down significantly. So I think, if I think back to any areas where, it was M&A deals gone wrong, it was set up for failure well before we even got to the M&A deal. Unfortunately, we hadn't had the capital to really put to work, and that's where learning from those, those experiences, we've managed, as we've grown the fund, to be much, much better about how we manage our investments.
Just maybe one additional comment to what Sam is saying. What I focus on a lot is the key to success. Most of the M&A we are involved in from the venture side is selling smaller companies to bigger companies, and right. Fast-growing small companies to more established bigger companies. And the key to making those deals happening is good housekeeping. Yeah, start behaving like a big company much sooner than you think is necessary or want to, because we see too much sloppiness, and kind of what I would say organizational mistakes made in companies early. And so we spend a lot of time on the companies that we invest in, making sure that their house is in order well before a transaction happens, and so that it isn't a lot of cleanup that delays a deal or breaks up a deal that is unnecessary, because that's where a lot of these deals go astray. And so we are in that sense very bureaucratic. Yeah, we tell companies to get their board minutes in order, to get their audits done, and their governance in place, way earlier than you would think necessary or desired.
Well, that is big value. That's clearly something that is, I've seen that so many times. That is, and many times people are not paying attention to that stuff, and it can make or break a deal.
Yeah.
So good for you. So I'd like to conclude by asking you a little bit about how Progress Ventures plans to continue its growth trajectory and leadership position, especially in the face of increasing market digitization and all these emerging technologies we see everywhere.
Yeah. So, I think in many ways we've already touched on it. We evolve in every one of our funds. Big next theme for our next fund is commerce tech. I think that's where at least half our next fund will be invested. And so from an area, that's where we're going. Geographically, we've always been more than just Boston and New York. We've invested all over the US. In the current fund, we have a number of international opportunities. I would expect to continue that in the next fund. Then mostly Europe. We haven't really invested in Asia, but I can see that happening in our next fund. Otherwise, I think it's doing very much the same of what we're doing right now. Maybe with a little bit more money, but we're not going to be raising $1 billion fund. We are the couple $100 million type of investor, doing a deal a quarter or two, and really working them. That is our model, and I think there's plenty of innovation left in our space to keep doing that. If anything, it's getting more technical and more complicated, and that suits us just fine. So,
yeah, I'll add to Adriaan's points and just saying that in addition to some of the market factors and where we're looking from an investor perspective, it's also where we're looking from our partner perspective, and where we've seen some great strategics join up with us. We're looking for new ones and the right ones who can benefit from the same perspective that we've shared with our existing partners, and ultimately, we see, as you say, the digitization and is changing the way that people shop. It's changing the way people watch television. It's changing many different things, and we believe the largest players out there are the perfect kind of partners where we can help them understand and dissect and ultimately partner with the right kinds of technologies going forward through the work that we do.
Well, I'm really impressed with Progress Ventures. And of course, I heard about you through some of our common colleagues and friends. But congratulations on the amazing progress you all have made. And thank you for taking time to visit with me today. I really appreciate it. If you're finding value in this podcast, we'd greatly appreciate your support by subscribing to our YouTube channel. Additionally, following us on Apple and Spotify and leaving up to a 5-star review would be immensely helpful. We welcome any feedback or questions related to the podcast, as well as suggestions for further topics and guests. You can leave your comments on our YouTube channel, and rest assured that I will read each and every one of them. Please also take a moment to check out our podcast sponsors, as they play a critical role in keeping this podcast running. For more information on specific topics, timestamps, or links to articles mentioned during the podcast, head over to mattwallerpodcast.com.